Okay, good evening, everyone. Welcome to today's webinar. So before I start, just want to make sure that whether you can view my screen and also listen to my voice. If can, just leave a yes in the chat box. Okay, thank you for the confirmation. So just want to let you know that before we end the webinar, we will conduct the Q&A session. So if you got any question, feel free to leave your question in the Q&A box. So my name is Sing Hui, licensed dealer at CGS International Futures Malaysia. So without further ado, let's get started with our webinar. So first thing first, the disclaimer. So basically, this webinar is for education and marketing purpose only. It does not consist any buying and selling call nor any investment advice. So these are the content that I'm going to cover later on. So first one, what is CFD? So CFD is a contract made between a buyer and seller to gain the exposure of the underlying instrument, but you don't take the ownership of it, whereby the difference between the open and closing price are cash settled. So if this slide is too technical for you, maybe this can help. Okay, so these are the type of CFD that we have offered. So first one is share CFD. So you can participate in the price change of like Gamuda or BYD and without owing the underlying of the company, the corporation. So the second one, we offer REIT CFD. So those dividend tendency investor can consider to put yourself into leverage of this REIT CFD. So like IGB real estate, Pavilion REITs, and also YTL REITs. Besides that, we also offer ETF CFD. So like KLCI ETF of China 50 ETF. And also we have Sharia Gold Tracker and Dow Jones US Titan 50 ETF. So if you want to know more about what the product that we offer, you can always go to our website listed here. So for information, these are the criteria that the Bursa CFD to be offered by us. So first, it must be listed on the main board of Bursa Securities. So the second, it must have average daily market cap, excluding the treasury share of 500 million in the past 3 months. Or if it's a newly listed corporation, which is the IPO corporation, then it must have 3 billion and above market cap. And the third one, the underlying corporation must meet the public shareholding spread requirement at the date of offer. So one of the beauty of trading CFD with CGS is that we are using direct market access business model. Means that what you see in the trading platform, the price that you see is same as the underlying market price. So you are actually, the order that you are execute, whether buy or sell, are impacted to the market. So unlike the market maker model, you are actually need to pay extra bid and ask price. So rest assured, we are using DMA model, which you can be assured that the truth of the market price. Now, you might wonder why trade CFD. So these are the benefit of trading CFD. Let me explain it in details. So first one, you will get leverage. So for example, if you want to get yourself exposed into Sunway Berhad with 1,000 units at 5 ringgit, so with traditional share, you need to come up with 5,000 ringgit. However, with CFD, because of the 10% margin only, so you only need to come up with 500 ringgit to get exposed on it. Same goes to Alibaba, the Hong Kong share. So if you buy 100 units at Hong Kong dollar 140, so you need to come up with this amount, the 14K Hong Kong dollar, if you are trading traditional share. But with CFD, because of we are charging 10% margin also, so you only need to come up with 1,400 Hong Kong dollar only. And if you want to get yourself into IGB REITs, the REITs that I mentioned just now. So example, you take 1,000 units at 2 ringgit 50 cents. So traditional share costs you 2,500. But with CFD, we are charging 20% margin for this counter. So you only need to come out with 500 ringgit instead of 2,500. So with margin, you can only come out with small amount of capital to gain less exposure on it. The 20% margin provides you 5 times leverage, while 10% margin grants you 10 times leverage. So with leverage, the gain and losses are magnified and the risks are much greater. So there is no maximum gain on your trading position if the market is moved in your favor. But if the market move against you, you can lose more than the fund that you deposited into your account. One good thing is that the risk can be mitigated or minimized by using our Viewpoint comprehensive suite of contingency orders. Now, the second benefit is that you have the flexibility to long and short the CFD. So in layman term, if you are taking the bullish stance, means that you want to buy now and then you sell later. But however, if the market is on bearish stance, CFD allow you to sell first and then you can buy back later. So in short, CFD is a helpful tool for you to enhance or protect your investment portfolio. So the third benefit is that there is no expiry date of contract. So unlike the single stock future that's mentioned here, like DBS future or Maybank futures, it always expired at the second last business day or last business day of the contract month. But with CFD, as long as you have sufficient funds to fulfill the margin requirement, CFD gives you the flexibility in the holding period. Okay, so the fourth benefit is that there is transparent pricing with our listed share, ETF, and REIT CFD because of the direct market access model that I mentioned just now. So we assure that you can participate in the liquidity and order book of the underlying. And what you see in the trading platform is what you will get. So you actually can make and tag the price. And participate in corporate action is also one of the benefit that trading CFD with us. So despite you are not actually owing the underlying instrument, but you are still entitled of this corporate action. So is including cash dividend, bonus issue, share split, and also consolidation. So for example, if you are holding 10,000 units of Apple and that did announce 26 cents dollar dividend per share. So you are actually entitled to this $2,600 of dollar dividend before the tax. However, to keep in mind that you are not entitled for any voting rights. Now, we are pleased to inform that all our CFD are settled in their respective settlement currency. All the profit, losses, and charges arising from the trade held in your account is in their respective currency. They will not automatically converted to your preferred base currency, although the equivalent amount will be shown in the trading platform. So if you are trading Maybank, it will be settled in ringgit. If you are trading like Alibaba, then it will be settled in Hong Kong dollar. And if you are trading like Tesla, it will be settled in US dollar. So if you would like to perform any foreign currency conversion, you can always let us or your FBR know so that we can proceed for you. Now, you might be wonder how much are the fee that trading with CFD. So first fee that we are charging is commission. Commission is charged on each CFD trade and is calculated as a percentage of the full contract value of the underlying stock that is bought or sold. So here is the formula of how you can calculate this commission. So let's get to the example of if you are buying XYZ at 1,000 unit at $10. So how we can count is you take 1,000 times $10 times the commission rate 0.25%. So you will get charged this $25. And another example is that if you are buy ABC counter with 500 unit at 5 ringgit at $5 with the commission rate of 0.25%, but you will still get charged of $15 because of this minimum commission fee. So if you would like to know more about what is the charges of commission rate, you can always go to our website to have a look. Now, the other fee that we are charging is overnight financing fee. So this financing fee is charged daily on any CFD position that held overnight, and it is computed based on the end of day mark-to-market value of your CFD portfolio and charged on the full contract value. So overnight financing is charged at an effective rate and is debit or credited from your account on a daily basis, and there will be no financing charge if the position is closed within the same day. So how to calculate this financing fee? So we have our overnight financing effective rates. So it will be financing rate plus or minus the central bank rate, and the accrual days is 1 day each day count from Monday till Thursday, and then 3 days count from Friday because of including the Saturday and Sunday. And the number of days in year will be 360 for US sector product and 365 days for the rest. Now, here's the example of our financing fee. So for example, if you are long 1,000 units of XYZ CFD and the mark-to-market price is $10 from day 1 to day 2, the effective rate will be, because of you are long, so effective rate will be central bank rate plus the financing rates, which is 4% plus 0.98% equal to 4.98%. And the year count, at the accrual days, because you only hold for 1 day, so it's 1. And the year count will be 360 because of US sector product. So this long overnight financing fee is 1,000 times 10 times the effective rate, 4.98%, times 1 divided by 360. So you will get just $1.38. Now for short financing fee, same example, but the effective rate will be different. It will be financing rate deduct by the central bank rate. So for deduct by 0.98%, so the 3.02% per annum is the effective rate. And the same as 1 and year count 360. So the calculation will be 1,000 times 10 times 3.02% times 1 divided by 360. So the short financing is lower, which is 0.83%. So in the case where the central bank rate is greater than the financing rate, then the short overnight financing fee is credited into account. Now, here's the profit scenario where how you can potentially profit from CFD. So this the comparison between you trading traditional share or listed share CFD. So on Friday, on Friday, you want to buy 100 units of Microsoft at 500. So for both case, and the initial outlay that for traditional share will be 50,000. But for CFD, because of the 10% margin only, you need to come up with 5,000 only. And this commission fee, 0.2%, is derived from the contract value 50,000. So you will get just 100 for both. So this is just example the commission fee. So on Wednesday, you sell it out at 520. So you gain profit of $2,000 for both case. And for the commission, 0.2% for both case, slightly higher, 104 for both case. And for the financing fee, assume that it's 6% per annum. Because of traditional share, you come with full contract value. But for CFD, because of the margin, so you will get just of financing fee, which taking the contract value 50,000 times 6% times 5 because of Friday equals to 3 day count, and then Monday and Tuesday. So 5 divided by 360. So this is the financing fee, 41.67. And the net profit will be 2,000 you earn from the trade and then deduct by the commission that you entry and exit. So 1,796 is the net profit from this traditional share. Well, for listed share CFD, the net profit you need to deduct another financing fee. So the earning is actually 1,754.33. Now, when you come to the return on initial outlay for the traditional share, we take 1,796 divide by the initial fund that you put in, 50,000 times 100%. So you earn 3.59%. But for share CFD, the return 1754.33 divide by 5,000 of the margin that you pay times 100%, you earn 35%. So with CFD, you earn 35% comparing to traditional share. That's the gain that amplified due to the leverage. Now, when it comes to the loss scenario, same thing that you buy 100 units of Microsoft at 500 for both case, and until Wednesday, you sell it out at the loss of 480. So your losses, your gross losses will be 2,000 for both. And then for commission, because of 0.2%, and the contract value will be slightly lower, so you get charge of 96. And the financing cost will be the same, 41.67 as the profit scenario just now. Now, when we compute the net losses, negative 2,000 is your loss from the trade, and then you need to add on the entry and exit for the commission. So this is your losses for traditional share. Well, for share CFD, to add on the financing fee, so this 2,237 is the losses. Is the net losses. Now, when we calculate the return on initial outlay, is we taking the net losses 2,196 divided by 50,000 of your initial outlay that you pay out. So you get 4.39% of loss. But with CFD, because of the initial outlay 5,000, so we're taking the net losses 2,237 divided by 5,000, and you get 44% of loss. So with the comparison, you can see that the losses are also amplified due to the leverage. So the risk of loss in CFD trading can be substantial, and you may lose more than your initial investment. Now, it's my obligation to share with you that the risk associated with CFD, including but not limited with the risk stated here, so leverage risk, counterparty risk, market risk, liquidity risk, and so on. So until you fully understand the product, benefit, and also risk associated, you should not trade CFD. Now, it's your time to consider whether CFD trading is appropriate for you. So you should ask yourself, do you have previous investment or trading experience in financial products such as securities and derivatives? And do you understand the difference between investing in share and trading in CFD? Or do you understand the concept of leverage, margin, and volatility? And then are you prepared to monitor and manage the risk of trading, and can you afford to lose all of or more than the initial capital that you put in? If all the answer here is yes, then CFD trading might be appropriate for you. Now, you might wonder how to trade CFD. So we will be providing you an online CFD trading platform, and the platform can be view your account balance summary and portfolio position details, create and manage user-defined watch list, input buy or sell CFD order and also contingency order, and then search and view historical orders and also execute the trades. These are the order type that we have in our platform, so including market order, limit order, stop loss market order, stop loss limit order, and also take profit order. And we are pleased to inform you that we have now web-based and also mobile-based trading platform available. Okay, so if you would want to know more about CFD trading, you can always go to our website and follow the sequence here to view for our video series we had already prepared for you. And just want to let you know that currently we are running our CFD campaign 2025. So you don't need to register for it, or our customer will be automatically enrolled. And what you need to do is that to trade either of the exchange, and there is no leaderboard. So as long as you hit certain tier of the commission, you stand a chance to earn our NVIDIA CFD or COTI CFD. So the campaign period will be 1st of April until 31st of December. So hurry up, you don't want to miss this chance. And if you would like to win the prize or you want to know more on how to trade CFD, you can always contact with your futures broking futures broking representative, or you can email us and call us at the contact here. Okay, so I have been end for my introduction, so I'm going to pass the stage to our Singapore research team, Billy.
Hello, thank you, Xin Hui. Let me just share my slide first.
Okay.
Okay, let me see. Right. Before I start, I'm just gonna do a quick introduction of myself. I'm Billy To. I'm the regional head of retail research at CGS International. I'm based in Singapore. So I'll just do a quick introduction on the macro outlook on Hong Kong, how the market has been performing before I pass the time to Varian to share on some of the technical and tactical trades that you guys can take advantage of using CFD as a tool. All right, so the Hong Kong market has been making headlines again. So we've seen trading activity is back, new IPOs are pouring in, and mainland investors are showing up in full force, right? But of course, beneath this excitement, there are some risks that we can't ignore, which makes CFD an even more interesting tool for investors to take advantage of, right? For those who do not know, Hong Kong was actually the number one IPO during the first half of 2025 this year. All right. Before I start, just a quick disclaimer. This is basically education and awareness purpose. This is not a recommendation to buy or sell. If you want to make any investment, do talk to your investment advisors, right? As they probably understand better in terms of your overall portfolio, your investment horizon, and your investment objective. All right. Let's just get starting. Let's just take a look at how the Hong Kong market has performed so far this year. Right. The first thing is the Hong Kong market has doing very well so far this year. In fact, it has outperformed most of the global markets, most of the markets, with the exception of South Korea's Kospi index. So the Hong Kong Hang Index was up by 36.6% year to date. So, sorry, this is not Japanese, sorry, it's the South Korean stock market. So it even outperformed the Bloomberg World Index, which has jumped by 18.3% year to date. So Hong Kong market has more or less come back. I think this is after slow performance over the last 4 to 5 years, right? Now, let's take a look at the next slide. So if you look at market activity, you can see from the chart here, you can see that the first 8 months of this year, the market turnover averaged at around 248.3 billion US dollar, which is an increase of 132% year on year, right? In August 2025, Hong Kong's average daily turnover hit 279.1 billion dollars, almost triple the level it was 1 year ago. Aside from that, we are also seeing high activity in the ETF trading, which saw huge growth with turnover rising 183%. Right, I'm just going to highlight some of those things later. Now, as I mentioned at the start of this, one global IPO venue in the first half of 2025. If you look at companies rate $5.5 billion, with IPOs alone accounting for $14.1 billion. So you can see from the chart here, you can see it's outperforming NASDAQ, New York, Shanghai, Japan, the rest of the market. It's nearly 7 times more than what it was last year. And there are 44 companies that go public in the first half of this year alone. Now, in the first 7 months, there are 53 new listings that raised about 127.9 billion Hong Kong dollars. And Deloitte is expecting the IPOs to raise until 250 to 280 billion by the end of this year. Now, so what have been driving that interest back into Hong Kong market? So as I talk about, Hong Kong market has underperformed over the last 4 to 5 years. So this is mainly a lot of the recovery. So what has been driving that recovery? Here are the few things. The first thing is basically the mainland southbound stock connect. You can see turnover has increased by 195% year on year. So it shows a huge growth, meaning that the Chinese mainland investors are going into the Hong Kong market. Part of it is because of the attractive valuation that there is. Aside from that, it's also because of the policy structural support that is in Hong Kong, as well as the listing reforms that we have seen. So I'm sure a lot of us are aware, right? There was a lot of protests prior to this in Hong Kong before COVID. Then there's COVID, everything hits Hong Kong. And there was a lot of pessimism in the Hong Kong market over the last 4 to 5 years. But we are seeing a lot of things gradually recover, gradually turning normalizing. So the lower interest rate as well as the liquidity tailwinds also help in that return, which is going to the next point where we see the IPO diversity as confidence start to come back. We see tech, healthcare, consumer, new energy, all these are starting to come back into Hong Kong market. So this has driven that valuation reopening in the sense that analysts, investors, fund managers, they are starting to re-rate Hong Kong market again, as Hong Kong was trading at a depressed valuation. So there is a lot of expectations that earnings will recover with some of the support from this policy and structural reform within both Hong Kong and China. So this re-rating is expected to happen. So we have seen a lot of the money flowing into Hong Kong market, not just from the mainland Chinese, but also from foreign investors as seen by the growth in the ETF market. Now, so the improved macro environment has also helped. So you have seen quite a few thematics. So I think Viren will touch on some of the stocks within that space. I'm sure you guys are probably familiar with some of the names. So your tech, your innovation list, your AI narratives are all helping to re-energize investor interest into Hong Kong market. So I'll touch a bit on that later when we talk about the outlook. Now, some sectors like your healthcare, information tech, consumption are also projected to improve margin and earnings. Now, this is where the strategy that we want to talk about, how we are still looking at growth, albeit at a slower growth than what it was at the start of the year. I think as shown in the table at the starting of the slide, you have seen Hong Kong outperform most of the markets with about 30 plus over percent year-to-date total return, right? So we do expect things to continue to improve, but it will normalize to a level that is more moderate. Now, one of the reason for that is because of your cheap self-sufficiency narrative. I think you guys, most of us who have been following the Hong Kong and overseas market would realize that the US-China tension is still there, especially on the tech front. So there's a lot of concern in terms of tech security, who is going to dominate the AI. So all these things will really drive that interest for Chinese companies as well, Hong Kong companies to protect their own tech. So this is where it will benefit a lot of the Hong Kong market. So AI models adopting homegrown chips. So if you can look at some of the Huawei roadmap as well as the SMIC, a lot of this announcement that you've seen, you notice that the Chinese are starting to look into homegrown chips as well, homegrown technology rather than rely on the United States as well. So you can see there is also a crackdown into Nvidia's potential monopoly in the space. I think this is a sign that we are seeing the Chinese are being more aggressive to protect their own homegrown champions. So this is really likely to drive that narrative going forward, even as we see the US China probably there might be some form of agreement as Trump and Xi is likely to meet towards the end of I think it's the ASEAN one of the summit, right? So probably there will be the TikTok deal. So we should see some of those progress and development. And along the line, you notice that the Chinese will continue to emphasize on their homegrown tech champions. Now, aside from that, your southbound inflows remain strong. Plus, I talk about the global fund inflows via offshore ETF. So we are continuing to see that, right? So that 8.7 billion daily against average in September is a sign that the southbound inflow continue to remain healthy. But having said that, valuation is no longer cheap, but it's not at a level that is of concern yet. For example, the Hang Seng Index forward PE remains at 12.7 times, which is above the 10-year average, but still 15% below its peak. Now, MSCI China is at 14.1 times, which is 32% below its 10-year high. Now, if you look at Nasdaq and compare that with Hang Seng Tech, the premium has already narrowed to about 6%, but it still shows that the Hong Kong market is still trading at a slight discount. Now, having said that, there is a bit of concentration risk, and I think some of the names Varen will highlight later, like your Alibaba, your Tencent, and Baidu. So a lot of these companies consist about 70% of the September gain in the Hang Seng Index. So going forward, we do expect markets to continue to be positive, but at a slower level as we await for the fourth plenum in October 2025 for further catalysts from the Chinese government. Now, some of the key risks to take into consideration, your Chinese macro and regulatory environment, I think that's very important. And of course, there is a lot of expectations on earnings growth. So if that fails to deliver, your valuation gains may reverse. Now, interest rate tightening could be an issue. If there is a delay in the cuts that is expected, that could also dampen rally. Now, I think earlier I talked about market concentration, like your Alibaba, your Tencent. So those are concerned because while some of these mega caps continue to drive the rally, the breadth is not that strong. So it's a bit weak on that front. Then your geopolitical and US-China tension. So that's something to keep an eye on. I think on the base case, a lot of us do expect that US and China to come to some form of agreement at the end of the day. But it is best to keep in mind to keep track on what's going to happen, especially announcement on Twitter and all that by President Trump, as well as how China might respond to some of the things that the US talk about. The property sector weakness is another thing to look into. I think we've gone past that. I think there is an expectation that the Chinese government will help in some form, in some ways, but we do have to keep in mind that is a risk that will be something that the investor will continue to look into as we go forward. All right, I think that's it on my end. I'm not gonna waste too much time because I think a lot of us probably wanted to see what are some of the tactical and technical trades strategies that Viren will share. So I will just pass the time. Viren, are you ready?
Yeah, I'm all ready to make everybody, to share my market outlook. Yep. So
Okay, let me just
okay, just need to share my screen and yep. Okay, so before I start, I think just want to if you can just put one just type one if you can hear me loud and clear and then see my slide. If two is for though you can't see my slide and you cannot hear me properly. So if you can just put because I don't wish to at the end of the day after that you cannot hear what I say. All right, so if you can just put one, you can see my slide, see my title, and then my destination and everything. So if you can just put one if you can hear me and see my slide clearly, two if you can't. All right, just go ahead. All right, just give you a minute to do it. Okay, I think most of you are great. So I shall start. Okay, so I think a bit of backdrop on the Hong Kong market. I think before I go on everything, I think I just want to show what's the macro view on the whole of Asia market as well as a firm. All right, so why is Asia so strong? Including Malaysia. All right, KLCI has already broken a new has already rebounded and go rally on top of that. So if you look at that, I think ASEAN remain very firm. I think second half of the year 2025, I think Jakarta is actually one of the best winner. Other than Singapore, Singapore has strong. The SDI has already broken 4,000 and go all the way up. But the JCI is not losing. All right, so as well as the KLCI. All right, the JCI break 8,000 for third time and has already finally broken. Thailand also seems somewhat bottoming out. I think you can see that the Thai baht against the dollar. I think Thai baht has been strengthening against the dollar. Not only the dollar, I think it's strengthened against the pound and the Aussie dollar as well, so, and the euro as well. So it has already broken 1,003. But despite some correction, for the past 3 days, I think we still remain positive. Singapore, although make new high, but I think momentum did slightly, and then despite breaking above 4,003, but nonetheless, I think like the KLCI, I will remain strong with the SDI, with the target. All right, so positive on Hong Kong biotech sector. But near term, I think we should see some weakness, some correction. So biotech sector like Duality, Biotech, and all this. But I think these are not in CFD, but you can make it as a long-term investment is 2820 and 3174. And some financials are looking back very strongly. All right, but what caught the Hong Kong market recently, I think yesterday and today, is actually the Apple concept stocks. All right, you can see that Phil Hong Ting, Cowell, Q Technology, Luxure, and Lens all rallied all very strongly. Minimally, they are seeing a more than 14% growth. I think Fit Hong Ting, I think Monday was seeing a 14%. Cowell yesterday see a 10% growth. Q Technology and so on as well. So Apple Pay is strong. All right. So the next thing, what is in play? All right, will be the Alibaba, will be your Tencent, your Baidu, all the AI play, and then your cloud computing as well. All right. So if you have any question, just put in the Q&A. If not, yeah, just I will just put in the Q&A. I think me or Billy will actually answer your question later on after this presentation. All right. So okay. So what I'm going to say is what caused the A shares to and the Hong Kong market to be so strong. All right, so you can see that southbound flow into the Hong Kong market. You can see that total as 866 billion USD is around 110 billion, above way before 2024. And this was a August number. The September number is not out yet, not fully confirmed, so I don't put it in. But just by judging this number, we can see that it's very strong already. All right, you can see on my fourth point, August turnover, actually, versus the July numbers, we are plus 7% up, and then northbound means that the fund flow into the Shanghai exchange, we can see that it is actually stronger. But what is interesting is the FDI actually fell. I think long-term capital flows for the foreign fund flow into the Chinese market is slightly weaker, but in the Hong Kong market is actually stronger as well. So what can we interpret from that? All right, so I think major support for the Hong Kong equities. The second point is very strong. All right, so this policy stimulus is very important. It gives you all the fund flow into the Hong Kong market. So in other words, I think the market is very supported, but I think the Hong Kong market and the Chinese market is very supported by the Chinese national team. All right, so this actually will cause the market to actually rise further. All right, market, I think easing condition, you know that the Hong Kong dollar is actually pegged to the US dollar, but I think they have some very strong measure to peg the Hong Kong dollar to keep it from being overvalued and as well. All right, but what with all the pros, but there's a risk. So what are the risks? First thing, you know that property market in the mainland China hasn't been doing well. I think rally breadth, this one is very subjective, but I noticed that breadth is actually very neutral. I won't say that is narrow, but this is what the media report, but I say that is much more of neutral uh breadth as well. So and then what lastly, I think this is very famous is uncertainty growth and trade tension among the market as well. All right, so this is all we had. Okay, so next one. All right, so Hang Seng Index, what's the scenario forecast? All right, I think this one you can just take picture on it, and then we'll just make it over there going on forward. But I think that you can just take forward. Then I'll share with you on the technical chart itself. It's much easier, much better on this as well. All right, so I think there's one question on since the US tech stock are doing very well, what's the view for Asia tech company in the next quarter? Very good question by Anonymous. But I want to say what's the global market breadth? All right, I just checked with my US analyst. Is a tech artist, very proficient in reading market breadth. What he told me is market breadth for the US market is still very healthy. It's still very well supported. The S&P 500. You can see that 60% of the stock above 200-day moving average is very moderate. All right, you want to look at that? We are looking at that. But you look at NYSE, which represent the Dow Jones Industrial Average, is actually declining. So means that what does it mean? The Dow, the DJIA, which is what a lot of the insti sites are tracking, are actually declining. So means that they are not participating in the broad rally. So stocks like your traditional Visa, American Express, they are not really being overbought by the institutional players. But rather, I think many of the operators, or you can say that the ultra rich high net worth people, retailers, they are all buying all the S&P 500 stock, particularly the Amazon, the Apple, and etc. So all the key major tech stock, your Nvidia, your Micron will be best. You can see, but I think if you can look at that, we have CFD. You could look at Micron as well. So Nasdaq 100, which comprise of the top 100 stock, tech stock, is above 50-day, 59%. Slightly means that the S&P 500 and the Nasdaq 100, they are quite close to each other. Short term weak, but long term we are seeing a moderate, healthy upside, neutral, healthy upside. All right, so Hang Seng is both in tech, financials. Financials are more concentrated in your insurance, such as your Ping An Insurance, 2318, 2601, China Life Insurance, and healthcare biotech. Healthcare biotech like Duality and such as well. But this year round, as compared to last year, we can see that CSI 300 actually has risen very strongly. driven optimism, but rally is quite narrow and leverage. Breadth is much on neutral. I would say that is much of a positive neutral. All because I think foreign fund flow are not going to CSI 300, but I think the national team is supporting the CSI 300. In other way, I read from some news is that the Chinese government want to use the A shares to actually create wealth, to create more consumerism within the Chinese market going forward. So August we could see that there's slightly more spending in the Chinese market as well. So that's one of the small effect of how the stock market in China actually take off on as well on that. So what's the takeaway? I think US and Asia shows very much narrow rally, but on the other side, I think Japan is showing a broader rally as well. So, but today after the holiday, I think there's some correction. Heavyweight is always the thing like in US, Nvidia, Micron, AMD will be leading the way. In Hong Kong will be Tencent, Alibaba as well. All right. So stronger US is still stronger than Asia and Hong Kong, but doesn't mean that Hong Kong is not going to do well. But I think if US there's a correction, stronger than usual correction, I think Hong Kong market will likely benefit. Because you will know that the fund flow will always go to the cheaper valuation and safer haven on this. Okay, so these are the breadth. I think you can take a snapshot. I think this is update of today. I think you can see that the Dow Jones the advance and decline is quite even, and you can see that new 52 weeks high is at 13. 10-day I think much more is like there are 13 stocks that's overbought as well. Compared to S&P 500, I think 200 days 60% of it all this. But you can see that Nikkei, there's much more. Hang Seng, there's much more compared to the US. So we can say that it's equally tied on this. But I think that slightly the Asia market performs slightly better than the US on this. Okay. All right, so if we go through the technical chart, what are we looking at? I think first off, we are looking at the uptrend. The trend is doing well for the Hang Seng. I think has been on uptrend for since 2 years. Since the end of 2023, the first leg of the rally started in April in late 2023. You can see one rally, and then after that, this was last year. 2024 when the stimulus came and then correction, one more pump, and then April there's one large sharp sell out because of tariff, and then after that the uptrend has been ongoing very strongly. So we think that upside target we like to see 28750 over the longer term period for the Hang Seng Index. All right, you can look at the monthly chart, right? Okay, so I'm using Wyckoff as a one of the analytical tool. So you can see that since 1998 and then 2008, and then you can see that 2003 and 2004 we got a series of higher lows and a bit of higher highs. You can see that by climax and then spring test which is the key of the selling pressure that came in down from 2018 all the way down. I can see a former double bottom. But if you take this double bottom that we are going to see, if you look at this square and then make it up, I think it's going to hit this area over here 28,750 levels as well. Okay, so these are the levels that we are looking at for the level over the longer term period. So means that it's going to come down, here come down, and then if the correction is likely to be minute, this may be an impulse elliott wave and then go up to 31,800 levels going forward on this. All right. Okay, so moving on. Tech index doing very well today, exceptionally well. We can see that on last week it hit near 6,005 before correction, but we can see that correction was relatively muted on this. And then after that you keep sustaining above 6195, and then we have bullish engulfing candle on this, and then closing above the 9 period conversion line over Ichimoku. So we think that it's likely go up further. Near term wise, I think it will retest 6,500 or slightly higher, 6,650 and then before it correct. But long term wise, I'm looking at 7,355 levels going forward. All right, so the next we are coming at some of the stocks on the Apple Play. So Core E Holding is one of the interesting stock. You can get ready your camera and scan my reports since dated 6 August, and then you track my following that how well my calls have been doing. All right, so I think it's going to do very well. I think despite some correction we seen on yesterday. All right, pump up and then some correction. I think that stock is going to be supported at around $36.08 and $35.55 level as well before about rebounding on the upside again. All right, so $51. I think near term target will be at 43.50, long term target at $51 going forward as well. Okay, so next one. Okay, Alibaba. I think Alibaba is strong. Straightforward. I think today there are some news on Alibaba. I think it's going to be strong. If you have CFD, I think you can go into looking at BABA. I think the US ADR. I think we do offer that. I think if not, Xinghui can actually help you double check on this. But you can see the uptrend is really very strong. You can see that it has broken out of the symmetrical triangle, higher high, high lows. And recently today, it just broke out of the consolidated range. Means that what do you mean? All right, it means that buying pressure has been on strong, and then we are likely to see near-term TP at 216 going forward on this. And what's more, you can see that all indicators between long, medium, and short term are all rising. Even the directional movement index is signaling that the bullish strength is still strong and intact. But in the event of correction, I think that 144.90 will be well supported. If there's a deeper three-way correction down, larger than usual, I think 122 will be the best level to accumulate on weakness as well. All right, so for more info, scan the QR code and then you can access the report that is dated in 14 August 2025. All right, so next one will be on Tencent 700. I think major uptrend. Still very strong. I think not as strong as what we seen in Baba in terms of trend, structure, and momentum. But I think that long-term MACD, the long-term MACD is not bad. It's very strong. I think in fact is stronger than what Alibaba is showing. A very steady rise since February of this year. I think major uptrend still remains. And what's most important is that it stays supported above the 600 psychological level. All right. So hence, all right, I maintain my near-term TP at 681. So and then once it stays supported, it move higher tomorrow morning. I'm looking at next long-term target at 710 as price and momentum all are showing the same confluence signal on this as well. More info, please scan the QR code over here. All right. All right, Baidu, one of the multi-bagger. I think Baidu, nobody was. I think back in June, July, nobody was very positive about it. Even I was skeptical about it. But once it break out of the descending triangle, I was like, hey, I think Baidu is coming back with the AI development and stuff like this. Furthermore, once you see that it gaps up above the 120 level, as that is 119.59, but we round off 120. It did do a rounding top, corrected, but you can see that strong buying pressure was seen above 120. So we could see that this level could see a very strong upside. I think correction is likely to be minimal. If there is, it's likely to stay about 119 and maybe at 112 level. And then long-term target, we are looking at $200. It's all within my report over this and the QR code. All right. All right, I think this one will be one of the last few stocks that's doing well. I think next one, PopMart will. I'm looking at a further decline or correction. But let's go to SMIC. So SMIC, I think you can know that Chinese actually ban. They are looking to ban the HVT chip from Nvidia. So, but what does it translate? It means that I think SMIC Chinese chip manufacturer are looking good, so we are looking at a further upside on this. So maintain a long-term target $100. So how long term is that? Maybe 6 to 1 year. All right. For more info, scan the QR code to access my report. I think my report always has a validity of 3 to 1 year period on this. All right, last but not least, I think Pop Mart, looking at a very corrective structure, I think it reached my first target price before correcting. So likely it's going to go down to 235 and 203 before rebounding higher. Right now, I think Pop Mart is going to a near-term bearish strength. So I think I'm looking to sell into strength with all the momentum looking at overbought. So I'm looking to go buy to short on strength and then buy on winners at 243 cents. All right, last but not least, I think if you are a consumer player, I think you could look for further correction until 47.40, buy on rebound and then get on upside. I think we are accumulating at $47.50 and then maintain a long-term target at $70 going forward on this. All right, so I think there's a few Q&A. I think answer some of that as I goes by. But A50 index, I'm strong on A50 index. Rally will continue, but I think I will buy a bit or pull back on this as well. All right, so and then just now the US stock are doing well. Asia tech company, I think they are very complementary. I think Alibaba, Baidu, anything that's to do with AI, they can complementary with the US, such as Pony AI, Big Bear AI, and then Icon Computer, Rigidity Computer, and then your chip name. I think we are looking for more Oracle and IBM and those heavyweights on this as well. All right, so I shall pass my time to Billy or Xin Hui for the Q&A to you all. All right, pass you all the time. Thank you.
Thanks, Weiren, for sharing. Okay, so I'm seeing another question, which is CFD available for stock in the second board, also for IPO stock? So as mentioned just now, only member can be allowed and fulfill the other criteria. So for IPO stock, it must be listed first, and then we will check through. If it's okay, then yeah, we will be offered. And there's another question. If I want to build a portfolio, how many stock should I have in the portfolio and which stock should I have in it? Yeah. Billy, you want to answer for this?
I think firstly this is quite depending on your preference. That's one thing. But I think just in as a general guideline, I think if you only have 1 to 5 stocks, then it's probably too few. So it's probably a bit risky. If you have too many, like 50 plus stocks in your portfolio, then it's probably a bit too much, right? It'll be hard for you to track. So the sweet spot for most retail investors are likely to be around 15 to 25 stocks. I think it depends again, but in terms of your appetite, as well as whether you're just looking at the local market or you're looking at, for example, Hong Kong as well as with US market. So these are things that you can consider. And in terms of which stocks you should have in your portfolio, I guess think of your portfolio as a building block. I guess you should have some core holdings. So your core holdings would probably be some of those foundation stocks that provide you with stable defensive portfolio. So in general, I will ask, especially if you're new to investing, to just touch on your largest, say in Malaysia, your KLCI index. So those large established companies to start off with. So these consumer names will be able to help you as well. Things like Coca-Cola, those who have a strong track record of more than 50, 60 years of dividend increase, right? Then, of course, you want to also tap on growth engine. I think Weiren touched a bit on some of the stocks that we have in Hong Kong. So those are areas that you can really take advantage of. And then, of course, last but not least, a bit of income, which is your dividend play. So things like your REITs, your banks and all that. Yeah. So in general, that's just a general guideline. I think it's hard to say what works for, I think everyone have their own preference in terms of how they want to build their portfolio. Yeah. Yeah, I think we don't have any more questions. Sino, I think you're mute. Can't hear you. You're mute, I think. Yeah, she's still mute, right? Sino, you're mute. You're mute. You're muted.
I see.
Yes,
Okay.
still muted.
So I'm seeing
Yeah.
one participant is raised the hand. So if you got any question, just type in the Q&A
Oh,
box.
so there's one on can we short the Bursa stock CFD?
Okay, so unfortunately, Bursa stock cannot be short.
Okay. Maybe Viren, Viren, are you still there?
Yeah,
Maybe you can share in the near term what are some of the top you think that stocks that have a bit of momentum that can take advantage of.
I think first of almost, I think like what I think Pop is out of the picture for now. I think Labubu is oversupply. The IP is facing up question. And if you look at my report and you track down the links, right, I've already achieved a gain of 1,200% on PopMart as well. So by having this sort of gain, I think we put a temporary stop. It's too late to get. But what do you have over here? If I can share my screen again. On this, I think the most like I want is to talk about first Baidu. I think it's just have to bottom. It has bottom already, so just need to look for the best entry price to look at 119 or something, or even buy a spot over this as well. Or another thing is SMIC. I think SMIC are quite big. I think we do. If not wrong, I need to check with Singhui whether do we offer this as a CFD product. But if we does, I think you can take advantage of it. But if not, I think this stock that you can look for to hold on for a long term. I think steady trend momentum wise, you can see that is strong and etc. All right. Another thing I don't really like. But I think Alibaba, I have to give it in. All right. I think Alibaba was a COVID darling back in 2020, 2021 before it goes on the correction. But you can see that it recently has regained strength on this. But otherwise, if you want to keep it safe, you want to buy the most liquid, I think you can look at Hang Seng Tech Index CFD, or you can look at the Hang Seng Index as well. So if you rank in order, I will look at Baidu, SMIC, and then Alibaba.
Yeah, so just to add on the SMIC, yes, we do offer, and also Alibaba also offer in Hong Kong exchange.
All right, cool.
I think if there's no more question, then I think we could end.
Yes, yes.
Okay. Thank you. Thanks so much for your time.
Okay, thank you, Billy and Weiren, for joining, and thank you for all our participants.
All right, thank you very much. Have a good evening and hope you all trade safely. All right, cool.
Okay, goodbye.